Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Byju has made a repayment proposal to lenders in which the edtech has offered to pay back its entire $1.2 billion term loan in less than 6 months. The proposed plan submitted by Byju to lenders includes the sale of Epic and Great Learning for $800 million to $1 billion.
Grocery delivery service Instacart is looking to raise up to $616 million along with selling stockholders in its IPO. As per regulatory filings seen by Reuters, the company and its selling shareholders are offering 22 million shares priced between $26 and $28 apiece.
B2B SaaS platform for financial institutions Perfios has raised $229 million in its Series D funding round led by Kedara Capital in a combination of a primary fundraise and a secondary sale. This marks one of the largest investments in an Indian B2B SaaS company in 2023.
Intercity food delivery platform Just My Roots has acquired regional packaged food delivery startup The State Plate. The buyout is part of Just My Roots' plans to venture into the regional packaged food industry. With this deal, TSP plans to become a 100 crore brand in the next 3 years.
Venture Catalyst has fully exited from its portfolio Coovers, a B2B e-commerce platform for auto spare parts with 2.1x returns in just 1.5 years. Venture Catalyst exited its investment in Coovers post the latter's acquisition by Schaeffler.
Google faces its biggest ever legal challenge. Fends off accusations from the US government that it acted unlawfully to build its overwhelming dominance of online search. US Justice Department is expected to detail how Google paid billions of dollars annually to keep its search engine atop the leaderboard.
Alibaba's ex-group CEO Daniel Zhang quit just 2 months after concentrating his focus on cloud computing. New group CEO Eddie Wu will currently become acting CEO and chairman of a unit grappling with weak sales growth ahead of an IPO planned for next year.
Those were the headlines that we're tracking for you today. Now, the top story this evening, EdTech unicorn and India's most valued startup, Byju, in a surprise move, has made a repayment proposal to its lenders. In the proposal, Byju is offered to pay back its entire $1.2 billion term loan in less than 6 months. Shruti, how does Byju plan to do this, and what are your sources telling you?
That's right, Arundhati, what you mentioned. EdTech major Byju has made a repayment proposal to lenders in which the firm has offered to pay back its entire $1.2 billion term loan in less than 6 months. First reported by Bloomberg and independently confirmed by CNBC-TV18, Byju is offering to repay $300 million of the distressed debt within 3 months if the amendment proposal is accepted and the remaining amount in the subsequent 3 months. The proposal has been sent and the lenders are reviewing the proposal and are seeking more details about how the repayment will be funded. Now, sources also tell us that the contours of the plan include the sale of Epic and Great Learning for $800 million to $1 billion. And the sale is part of the plan to go debt-free and bring the business back on track. Now, remember, Byju had bought Epic for $500 million in 2021 and it acquired Great Learning for $600 million in the same year. Well, if this proposal gets accepted, it will bring some cheer to the beleaguered startup. Also remember, Byju and its lenders of the term loan B have been caught up in severe conflict for almost a year when several negotiations to alter the loan repayment terms have failed. So also Byju has been looking to raise funds since the start of the year. However, the company has not managed to close the round and amidst ongoing challenges on various domestic and international fronts. In fact, we will have to wait and see if Byju submits its much-awaited audited financials by the deadline of 30th September. Moving on, also on what's brewing, B2B SaaS fintech unicorn Perfios has raised $229 million in its Series D funding round from Kedara Capital. Now, the private equity investor will invest through a combination of a primary fundraise and a secondary sale. This also marks one of the largest investments in an Indian B2B SaaS company this year. And to talk to us about the future roadmap at Perfios, joining me now is its CEO, Sabyasachi Goswami. Sabyasachi, welcome to Startup Street. And like I mentioned earlier, this round marks one of the largest investments in an Indian B2B SaaS company this year. It is a combination of a primary fundraise and a secondary sale. So take us through the contours of the deal. We know who's in, but tell us which investors are out.
Thanks, Shruti. To answer your question, none are out actually.
Okay.
Everybody is in. The primary focus of company Perfios has always been creating wealth for the company employees. And so the raise is the combination of primary and secondary. Of course, primary for the obvious reasons for the growth in Southeast Asia, MENA, and US and Europe. Having said that, there is a small portion of dilution from one of the existing investors, but it's not completely out.
Okay.
So all the three will be existing in the cap table for sure.
All right. But Sabyasachi, tell us, why did you decide to go private and not public to raise capital?
So hopefully I'll be able to break that news soon as well.
Okay.
But on a serious note, it requires a little bit of maturity, planning, and execution capability, which we have built over years. But we are fine-tuning those before we hit the market. I think 18 to 24 months is the timeline what we are looking for.
Okay.
Having said that, there are macro factors which we don't control. So it's not a confirmed timeline, but definitely as a company, we are aspiring for about.
All right. You call yourself a B2B SaaS fintech, and you currently process 1.7 billion transactions a year with an assets under management of $36 billion. So tell us what you do and how are you helping banks and financial institutions facilitate faster decisioning?
Okay. So we are a company who has evolved from a single product to a multi-product company, starting from personal finance management. I don't know how many of you know the name of the company. It's Personal Finance One Stop. That's Perfios for you.
Yeah.
That's where the journey started. But today we have about 75 plus products and solutions, which caters to end-to-end customer lifecycle for all the financial institutions, helping them in the digitalization, not digitization. The difference, I'll quickly mention, digitalization is the end-to-end process management, which includes starting from origination to onboarding to decisioning, underwriting, and processing, and improving the entire life cycle, not only on building a wonderful looking front end, but also the middle layer and the back end layer. So it's not about automation, it's about changing the complete process and the mindset shift. That's what we do.
Okay. You are seeing 100% year-on-year growth, Sabyasachi, and an improving bottom line. If you could take me through your current business growth numbers quickly, and what is the road to profitability looking like?
Okay. So, by the way, we are already profitable. I mean, last year financial is about to be filed.
Okay.
Maybe soon. But we are a bit positive with about 18%. So we are definitely profitable. From an ARR perspective, we'll be soon 100 million in ARR.
Okay.
So we'll close up this year for sure. And that's the roadmap. However, we are saying that as we are preparing for IPO, obviously we want to multiply this. So very soon you will see this trend of 100% continues for the next 3 to 4 years, and we hit the market.
All right. You also, let's just quickly now talk about the fundraise. You now plan to invest in new age technologies to enhance your product stack. You want to solve the entire end-to-end customer journey across banking, insurance, and embedded commerce. Elaborate on these plans and what's in the pipeline, and if you could also share timelines.
So the first is that we heavily invest in the latest technologies and R&D, which includes the latest AI models, the data science techniques that we can use to better our models. And we also invest all of this technology to create new products. And from our company perspective, what we look at is doing a bit of financial inclusion, which includes not only India, but global aspirations.
Yeah.
So about 5 billion people getting covered under this financial inclusion, 5 billion people. Okay. Where we are looking to bridging the gap and taking the financial services and providing the access to the last mile. Okay. So most of our products and solutions that we are researching and working is to cater to that segment. But one is that. Now, the second one is we are doing a lot of product creation on the forensics, fraud management, InsurTech, which will not only do claim adjudication, but we also do fraud, wastage, and abuse, which is a big story. We have gone global there first and brought the product to India later, whereas all other products are India first, abroad later.
Okay. One final question. You already have a strong footprint in the Middle East and Southeast Asia. You plan to now deploy the fresh funds to fuel global expansion plans in North America and Europe. Talk to us about your global playbook.
So as you have seen, we are the category creator and a market leader in the market India, definitely. But we had strong aspirations of expanding globally. So we started about 3-4 years expanding to the adjacent geographies, which is very, very obvious for an Indian company. So we started with Southeast Asia and we have successfully expanded our footprint there. Now, obviously, the aspirations keeps growing with us. So we have expanded, plans to expand very soon to North America and Europe. Obviously, it's a high return, high risk market, but definitely it's a very, very exciting market.
Surely.
So very soon, hopefully in next about 8 to 12 months is when we'll hit these markets.
All right, Sabyasachi, on that note, we'll have to wrap up our conversation. Many thanks for joining us today on Startup Street and wish you the very best with all your expansion plans.
Thank you, Shruti. Thanks so much. And thanks to the entire CNBC team.
Moving on, Accel has announced the third edition of its Accelerator program, Atoms. And with us is the co-founder, is the partner at Accel. And he's here to talk to us about this third cohort. Bharat, thank you so much for joining us on the show today. Can you tell us how this one is different from your previous cohorts and what are the sectors you'll be focusing on?
Yeah, thanks, and good evening. So, we started the Atoms program back in 2021. We've done 2 cohorts, and we like to think of ourselves as being, in perpetual beta. The first 2 cohorts were largely horizontal. They were not sector focused. We were trying to solve for building a community around early stage founders and how do we help accelerate that journey and providing them to quick access to capital. With the third version of Atoms, what we're trying to do is more sector focused. So we have an AI cohort and an Industry 5.0 cohort. AI is being led by my colleague Priyank, and I'm leading the Industry 5.0 cohort. Here, again, we'll be doing something similar, but with nuances to the 2 sectors that we are going to focus on, which will be AI and Industry 5.0. Industry 5.0, for example, we are trying to focus a lot around GTM, which is the go-to-market piece. So building a strong community around the buyer side, which is largely enterprises with large manufacturing footprint. And how do you get these companies in front of them, to do pilots, to get them to buy their solutions.
Right. So, like you said, artificial intelligence is one of the sectors that you're going to focus on. And, artificial intelligence, generative AI has taken the world by storm. So, what are the kind of companies you're going to look at within this cohort? And also, what do you see and believe is the opportunity out here? How big is it?
Yeah, so on the AI side, we're looking at multiple different use cases. Obviously, there's a long history of investing activity for us in India and globally. So a lot of these use cases stem from our scale companies themselves. So be it on the consumer side or on the B2B side, both domestic as well as global. So we're looking at multiple different cuts of those, incubating some of these ideas as well as looking at net new opportunities. So this program actually gives us the flexibility to do both.
All right, absolutely. But when it comes to AI, right, it comes with its own set of challenges, especially when it comes to security and privacy issues. So how big of a challenge do you think that this will be, and how can this be tackled?
Yeah, so that's a very top of mind question that all of the founders and we have as well. In fact, we are looking at those as opportunities as well. So the security aspect, the privacy aspect, looking at companies actually building in those spaces and how can they potentially partner with companies that are actually building for net new opportunities. So both of those are in the consideration set when we're looking at AI.
All right. Now, under the program, you're going to shortlist about 3 to 7 early-stage startups, each for its 2 cohorts from India, Southeast Asia, and the Middle East. So what are the solutions you're looking at? How much will you invest in these themes? What's the investment thesis that you have? And apart from funds, what else will these companies get?
Right. So it's a holistic program. Think of it as a new age accelerator, sector focused. So we are looking to invest up to $500,000 in these companies. So this could be either a part of a round that's already happening, or it could be a net new round where we can price it, or we can do it as a safe note. So it gives us a lot of flexibility and speed. We will do about 3 to 5 companies in each of these cohorts, AI and Industry 5.0. So apart from the capital, you will have a mentor pool. This would be, scale founders, founders who've seen this early stage journey and identified some of the things that, pitfalls that founders need to avoid, and work with them closely on the mentoring side. We are also bringing in mentors from the buyer side, like I said, so they can give advice on how to build, what to build, what the buyer side is looking for, and not just for one company, but for the industry as a whole. So
Right,
that
and
you can think about scalability.
absolutely. And over the last 2 cohorts, you've invested in about 24 companies. How is your portfolio performing, and any exit plans?
Right. On the Atoms portfolio specifically, these are fairly early stage companies. So to give you some numbers, about 24 investments till date, we've co-led, led, or participated in all of them, and they've gone on to raise about 160 million in total. Quite a few of them are, I would say, in that Series A to B stage right now.
All right, Bharat. Thank you so much for joining us on the show today, and we wish you all the best with this going forward.
Thank you so much. Thanks for having me.
All right, with that, it's time for us to head into a short break. But coming up, a special discussion with Razorpay's co-founder and CEO Harshal Mathur about the company's IPO plans, growth picture, and much more. Stay tuned.
Welcome back to Startup Street. Fintech giant Razorpay, which is in the process of moving its parent entity from US to India, says its IPO is at least a couple of years away. In a chat with my colleague Ritu Singh on the sidelines of the Global Fintech Fest last week, Razorpay's co-founder and CEO Harshil Mathur said the company would go public only after it breaks even across all its businesses. Mathur also spoke about how business has evolved since the regulator brought about a slew of changes in digital lending guidelines last year. Take a look.
So I wanted to start by asking you, because the regulators and policymakers have also been here, what have been the key issues you've brought up with them? What have been the key concerns?
A lot of discussion right now has been around innovation, right? Like what more can we do? And like the regulators are constantly launching, like for example, they've announced credit lines on UPI. So what does that mean? How can we play a role? How can banks play a role? How can we work together to create that? So some conversations around that, around the innovation aspect. The second has been around regulation itself, yes. Right? Like where, what are some of the areas of regulation that are expected to relax or change over time, and trying to get sense of it. Of course, submitting our views on that. I think, and the last piece has been around, I think, the general concept of, and this is more from all of us together, right? The concept of cybercrime and financial literacy.
You know, in the last 1 year, we've seen a spate of guidelines. Of course, the big digital lending guidelines that define the role of LSPs, etc. The FLDG, the First Loss Default Guarantee Partnerships, capped at 5%. How have these affected your life? Have you had to sort of make significant changes? Have you brought up any of these with the regulator?
That's everyone's concern, including the regulators, and we understand their perspective. I think the ask has been, there is only one ask essentially, is as long as we can do it in a very consultative fashion, and we've done in a lot of regulations where there's a draft published first, there's comments expected, there's roundtables that happen around it, and then changes happen. When that happens, it's actually very easy for the industry to adopt because we know what's coming. We know what is a concern, we know why is there a concern, and we can build around it. We can even submit recommendations that, okay, if this is a concern, maybe you can solve it this way. So I think as long as that happens, it's easy. I think on regulations you mentioned, for example, FLDG, I mean, earlier there was discussion, everyone felt that there's going to be no FLDG, and everyone was like very worried about it.
So this 5% cap is not really...
it's a very positive, it's a very, very positive step that it basically
it's
shows...
It's not a gray area anymore.
Yeah, it basically shows that the regulator is okay with FLDG as long as it happens to a point. It's not a complete transfer of ownership from a regulated entity to non-regulated entity, but it's partly sharing of risk, which is what the purpose of FLDG should be, right? And I think that's what regulators defended. We hope that it over time expands as well a little from 5%, but we are also very certain that it should never be 90%.
Give us a business update of where things are at, what FY23 was like for you.
Yeah, we have seen massive growth in the last year. Our core business, which is a payment business, grew by a factor of almost 60% plus. Just on the core payments, which is the online payment side.
And the latest as of FY24?
FY24 is still underway. We hope it goes higher than 50%, 60% at least.
YOY growth.
YOY growth.
Okay. What about the neo-banking and lending part?
Yeah, so that's the core payments, online payments part. Then we have 3-4 more lines. So one is the neo-banking space. We're seeing really good traction around the financial management pieces that we're building. So we launched payroll, where we help businesses manage salary through our platform. We also have now a significant presence in the offline payments platform. We have about 650,000 terminals deployed in the offline world through Razorpay now, which is now EasyTap, which was now completely rebranded to Razorpay. And then we have recently launched in Malaysia. We are one of the first players to launch in Malaysia. We have a decent presence there now. What
is the trajectory? What is the road to profitability for the entire company as a whole before you can hit that milestone of going public?
Yeah, see, from the payment side, I mean, we have given it almost 8 years, and now it's breaking even, making decent amount of. I mean, the unit economics was always positive, but now it's breaking even beyond the operational costs, beyond the fixed costs at least. IPO timeline is at least 2 to 3 years, so we want to take about a year from there to go public.
But what are the aspirations for the lending part of the business?
I do believe, and this is different from most of our peers, we believe payments itself can make a decent amount of money. We want to do lending, not from the context of that, hey, it makes a lot of money. We actually believe our payments will still make more money than lending.
But it's a large market.
But so that's there's definitely a lot of need for lending. And I'm talking about B2B lending. That's what we focus on. So when I talk to an average business owner, the biggest hurdle to their growth.
So merchant lending could get how big for Razorpay?
Yeah, so on an overall basis, it could contribute about 30%, 35% of our revenue
by
next 2 years.
You're also in the process of shifting the domicile. We wanted an update on that because it's a costly affair. Your peer PhonePe, for instance, has had to spend more than 8,000 crores doing that. What about you?
Yeah, so it's going to be expensive, but see, that part is something we are we have convinced our investors and shareholders that hey, this is something we it makes sense for us. We're still figuring out a lot of intricacies around it. It's not just the cost part of it. There are a lot of small laws and regulations that kick in when you want to do that.
And how long before we see that happen? Because that is a precursor to your going public.
So the timeline is not really in our control. There's regulatory approvals and stuff like that. So I can't give an absolute date on it, but it should take at least a year, if not more.
All right. Harshal, thank you for sharing all of these updates with us. Pleasure speaking to you.
Thank you so much.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned to CNBC TV 18.